Okay, today we're going to talk about policy loans and withdrawals as pertains to your life insurance licensing exam course. Please, if you like this video, subscribe to my channel, turn on post notifications. My entire channel is structured on how to show you how to pass your life insurance pre-licensing exam course. So let's just get right in. Now, a policy loan is only available in policies that contain cash value. So you can take out a loan from the insurance carrier in an amount up to maximum of whatever the cash value equals. Now, since it's a loan, it's not taxed as income. Okay, that's why a lot of people will like life insurance policies as tax safety nets or tax havens, because you can take out the money and there is no tax on it since it's a loan. However, there is interest to that loan that you can use to pay that loan over time. So when the insured dies, any outstanding balance on the policy loan comes out of the death benefit. And a policy loan can only make a policy lapse if the loan is greater than the amount of cash value that the policy has. So let me go over that again here. Say the death benefit is $1 million and they have a loan against the cash value for $100,000. That means when they die, that $100,000 comes out of the death benefit, okay? And any outstanding interest. And say that the cash value in the policy is $200,000, and because they're not making payments back on the loan, the interest brought that $100,000 cash value loan up above $200,000, then the policy can lapse. Now, loan requests can be deferred, but they usually aren't. Now, what that means is the insurance company can defer the request for the loan, I think for like up to 6 months or something like that. Now, there's another type of loan called an automatic premium loan. Now, an automatic premium loan is never put through the loan is never put off. What this is, it allows the insured a safety so that they won't lapse their policy if there's enough cash value in there to pay for a premium. So say they miss their premium and the grace period expires. Instead of the policy lapsing, if there's enough money in the cash value to cover whatever their premium is, then that cash value will cover that premium. So some people actually use this as a way, once their cash value gets big enough, there's enough interest accumulating on that money to pay for the premium itself, okay? So say like that $1 million example I had before, say they have $1 million policy and it's $1,000 a month, and say they have $200,000 in cash value and they're earning enough interest to pay a big chunk of their premium, or maybe pay the whole thing. So maybe they're earning enough interest to pay the whole thing at that point. Now they can just use that interest to pay off their premium, or take some of the cash value to pay their premium instead of having to pay it out of their pocket. So that's just an option that some people have, but companies have this in place to help prevent the lapsing of a policy. So here we covered policy loans, the basics of it in a policy provision, and now there is an interest rate, a minimum interest rate that is charged to the loan. So it depends. Every company varies on what their interest rate is. I'm not going to say what the rates would be because that may date this video, but there is an interest rate, and that is in the policy. Usually it says what the interest rate will be if they borrow against it, and if someone needs to find out, they can always just call the company and figure it out. But there is an interest rate on any money that's borrowed as cash value. So as you're paying back the money that's borrowed from the cash value, you also have to pay interest on the loan. So I hope you found value in this video and you learned a little bit about policy loans and withdrawals in cash value and automatic premium loans. Subscribe to my channel if you did. Also, I have a separate channel, which is just my name, Justin Vomeigen, Vomeigen, Justin Vomeigen. And you can look for my channel, and that's on sales, as my agency specializes in final expense life insurance and selling life insurance over the phone. So if you want to learn how to sell life insurance over the phone, or check out what we got going on, then check out that channel too. And if you look up right here, you're going to see a video that covers every single type of life insurance policy that you'll need to know for your life insurance exam course.